What's up, guys? Today I want to speaking about Datadog is Ross when another AI stock is down. Like check it out. So episode 5 in playlist finance time in Rice versus Remix, Micron fell 24%, Datadog rose 6.6%. Memory, semis, network, even cybersecurity all fell together. Before anything, I turned on DDOG. I hold none of the stock in the comparison except Micron exposure discussed in earlier episode. I cannot guarantee any return and nobody can. This is education content. 5 days move to the 29 July close. Micron Technologies fell 24.24%. Applied Material fell 20.5%. Western Digital fell 11.4%. Seagate Technology fell 15%. Nvidia fell 9%. And Arista Network fell 8%. Even cybersecurity, usually the defensive corner of software, is fell. CrowdStrike (CRWD) fell 5.44% in 5 days. Palo Alto Network fell in 6.50% and Datadog rose 6.63% in 5 days. One correction before I go further. Datadog was not literally the only stock that rose. Sales closed up 3.79%, Fortnite up 2.16%, Seagate up 2.29% on the day. Datadog was among the strongest. Start with the revenue number because this is the part that is not sentiment. Datadog crossed $1 billion in a single quarter. In the quarter 1, 2026 revenue is around 1 billion. It's up 32% year over year versus estimate is beat 4.90% on revenue. Another recurring revenue 4.23 billion as of quarter 1. And the cash generation behind it, operation cash flow is around 335 million in the quarter 1. Free cash flow is 289 million in the quarter 1 and cash on hand is 4.8 billion on the 31 March 2026. But look carefully at the two margin number. Non-GAAP operating margin is 22%. Is around 223 million income. GAAP operating margin 1%, 7 million income. What the GAAP is stock compensation. Real cost to shareholder, dilution paid in shares. And the business, what Datadog actually sells in plain language, because the word observability explains simple. The problem, software is invisible. A modern application runs across hundreds of servers, database, and service add-ons. When it breaks or slows down, nobody knows which piece caused it. Every minute of downtime costs a large company real money. The product, a dashboard for everything. Datadog watches the whole stack and tell engineer exactly where the problem is. The customer number I find most convincing. Customer above $100 ARR is around 21% year over year. Why that matter? Large, not small account. Government angel, FedRAMP, hack certification. Clear Datadog for sensitive US federal workloads. AI angel, why this rose while chip fell? Datadog sits on different paths, two different ways to be exposed to AI. Hardware, Micron, Nvidia, WDC paid upfront when a data center is built. Revenue depends on capital spending decision and component pricing. Software Datadog paid every month for as long as the workload keep running. Revenue depends on usage and AI workload generate enormous amount of data to monitor. Memory pressure doesn't change. And the company is shipping AI specific product. CPU monitoring live, generally available. New AI product for recently launched. The logic more AI, so more to monitor. Every AI workload is another thing that can break. Now go to valuation. Now the uncomfortable part. This is where I have to be honest with you. What you are paying us to pay. Trailing PE, I know is very premium, 645% TTM earning. Forward PE is around 81% estimate earning. Forward price or cash flow is 51 times the kinder metric. And it now trades above where analysts had it. Current price Datadog is 264.20 on the 29 July close. 3-month average target is around 254.97 below the price. 52-week hike is around 278.70, very close. And a correction about that analyzed video. 2 months ago, a CFA analyst covered Datadog when it traded at 198.90. His discount cash flow model put fair value at 119.23, well below the price. He was not calling for 264. So is Datadog the next Micron? Let's test the analogy properly instead of just liking it. When the comparison breaks on the one thing that matters, Micron set up cheap then a shortage. Micron rose from a single-digit forward multiple. The market expect very little. Revenue grew 345% year over year on a memory pricing, not a new customer. Most of a return came from the market re-rating a head chip cycle stock. Datadog setup is expensive then grow. Datadog start at rock 81% time forward. Micron worked because it was cheap. Datadog is not cheap. That is the whole answer. If you want the next Micron, a headed cyclical price for disaster, Datadog is the opposite of the trade. It can still be a very good long-term holding. It just will not get there the same way. Also ask which part of Micron you mean. Micron rose over 700 in a year and then fell 24% in 5 days. If Datadog is the next Micron that include in the second half, high multiple stock doesn't fall less than cheap ones. They fall more. So let's see. My prediction is incorrect or correct at the 3 month next. Coverage is overwhelming positive, strong pay rating. Around 44, there is 37 analysts covering Datadog. Recent target rise 280 until 315 in UBS Citizen Guggenheim RBC. What anonymity means is priced in usually. When almost everyone is bullish, good news surprise less. The data that matters next. Everything in this episode get tested in about a week. Quarter 2 result land before the US Open on 6 August. Reported on the August 6 before market open. Last earning reaction is 31.3% on 7 May 2026, which cut both ways is volatile on earning. A stock that jumped 31% can drop that hard too. Fourth thing I would read in that report. First, revenue growth rate, not the beat. Second, customer above $100 ARR. Third, GAAP margin, not just non-GAAP. Fourth, guidance versus that 254.97 target. For honest risk to this bull case. First, growth is decelerating by design. Second, software spending is discretionary. Third, competition is heavy. Fourth, the stock is near its around 52 weeks high. You are buying at 264 again, $98 low 12 months ago. Bottom line, my honest read on Datadog today. 3 separate conclusions, and they don't all agree. The business is strong genuinely. $1 billion quarter, 32% growth, real cash flow, the divergence, real, not noise. Software use doesn't care about memory price this week. The next Micron, maybe yes, maybe no. Wrong analogy. Micron was cheap, this is price for success already. But nobody knows on the prediction. None of this a buy or sell recommendation. This is my own reading of public data for education only. I don't own Datadog. Prices are from the 29 July 2026 class and will be out of date by the time you watch. Always do your own research before making any investing analysis. Subscribe and follow Finance Time on the Rais Firdaus GitHub.io/my portfolio website. Earlier episode Jeffrey Nova, the 2 AI paper, the memory sell up, and the beginner guide. Full life breakdown of every holding, WAG, enterprise reasoning. Update on my X on the link and many more. See you in the next time. Good revenue. Data as the 2029 July 2026 US close.